105 million worth of SPY out the money puts came in above the ask last week alone. That is it. From 822 to last week, which would be 826 where it ended, we had $105 million worth of above the ask puts. That's not even just these puts. Above the ask ones are highlighted on here as purple and gold. Sometimes purple, always are the gold ones here. You can see by clicking the three dots here for the order details, this did come in above the ask. And you can see here just crazy amounts of them all of last week. This is only last week, which we were seeing all of these. So the whales are definitely happy because if we go to SPX here, you can see we fell down a bunch throughout all of the past week and had a major 3.37% down move after Jackson Hole, the meeting, just crushed the market after we had the meeting there. So this brings a lot of questions coming up for this next week, but not only this next week, but also for the fall season, for seasonality, because we have to remember seasonally in September and October, that is the worst 2 months for the stock market. So it's going to be very interesting what's coming up next, and you're going to want to stick around for this video to see how you can possibly trade all of this upcoming volatility. I'm going to give you all one warning, and this is the only time I'm going to say it. The next 2 months will be some of the most, not even some of the most, they're going to be the most difficult months you've traded or will trade in the stock market. So I'm telling you right now, most of you guys aren't going to do anything about that. If I were to give any recommendation, I'm assuming you continue to trade, which I'm assuming most will, trade less. That's my best recommendation. You will see why eventually once things start to get going here. And I did give out a tweet earlier kind of warning about this, but take it as you will. Be patient, please, for your own portfolio's sake. It's going to get very, very difficult. And if you thought the past week where we had a bunch of up movement and then just shanked straight down was a bit difficult to trade, it's going to get a lot harder. So you have to be careful. Only look for critical setups that you know you have good risk reward on. That's the best I can tell you. But right here on SPX, you can see we went, this worked perfectly last week. This is very, very difficult to predict this move. I am happy with how it played out, but I did mention that we would have a fake gap fill around 4,200 to 4,215, which is exactly what happened right here. I personally believe we will have some form of a fake out to the gap fill, as you can see here. Kind of like I've shared with you in previous videos, where we have us go like about halfway, like 4,210, 4,215, and then it falls back down, maybe find support around here. And we fell straight down off of that and continued down into my kind of demand zone around the 4,090 to 4,060 level. And it actually tore straight through and closed around 4,057, but we will see what happens in terms of the gap once futures open, and we have the open on the market tomorrow at 9:30 Eastern. But a very, very sharp downward move. One thing I do want to mention, I did mention this in the last video, this acts, or at least this day, if we go to the daily candle here, this day will act very similar to a FOMC meeting. And you have to remember, in previous FOMC meetings, for example, May 4th, we had a major upward candle, but then we actually had a gap down and it fell straight off of that. So a lot of bulls got baited in on this day specifically, and this is just a great kind of like example of a bull trap, because a ton of bulls got into this and then the bears ended up being the ones that won in the end, because we just fell straight for the following week. Now, am I saying that's going to happen here? No, I'm not expecting something like that. However, you have to be very, very careful with when you have very big event days like this and a massive move occurs off of those event days, because it can do the complete opposite right after, as we saw back here. So don't just think, oh, this is a super bearish daily candle, so it only has to go down, or it has a lot more room to go down. Just be very careful with that, especially with what I mentioned earlier, with everything being a lot of back and forth, and it's going to be very difficult to trade. You got to just look for really good setups here and look for your best risk reward in the end. But I did send out a clip yesterday on the Cheddarflow Twitter account. This bear flag right here, I'm going to go over it really quick. The bottom right here is the support, top is the resistance. We broke out of this bear flag, and you see the pull here, by the way, when we had a bunch of gap downs. We actually broke out of this bear flag, but now we made a head and shoulders pattern on the daily. You can see the left shoulder, the head right here, and the right shoulder, and now we're back into this bear flag. That's very bearish. The fact that we had actually a bullish breakout of a bear flag is really bullish, but then it got rejected right off of this line right here. Very funny how it works like this. This perfect line that goes across right here. We got rejected off of that, but now we're back into this previous bear flag. That's very bearish, and in terms of just a technical standpoint, not taking anything else into consideration, this is most likely, with a very high probability, going to retest around roughly 3,920 roughly to 3,950 50 depending on when the time it would hit, because that would be the bottom of the bear flag right here, and there's a good potential it can continue down and fall further. Now, does that mean we're going to go straight to that? No, this can be very choppy, guys. I'm telling you, just believe me with this. I do have models in terms of volatility, and also my timing theses for turn days. I have a lot of inversions happening coming up here in September, which means volatility is going to be prevalent because there's a lot of turn days that will happen. So it's going to seem like a lot of back and forth action. So you do have to be careful with that. And in terms of the put flow, like I was sharing with you guys in the intro, this is incredible. We saw these bears get seemingly squeezed out during the month of July because we saw this major squeeze to the upside while they were buying. They started buying like around 4,100 and continued up to the top, but they definitely got squeezed out to some degree and had to roll, especially their expirations to 1021 as we've seen here. But now it looks like they're getting back onto their previous winning ways as we saw all the way back in like March, April, May, etc., where they were winning on the downside. So now they are up in terms of the puts they were buying up here on SPY. So we're going to have to continue watching them here, and they did actually buy some more. You can see here above the ask puts, we saw 8.9 million, 8.2 million, and a 3.6 million all came in after hours on Friday at 4:05 and 4:04 p.m. Eastern. So these are for 1021 and then this 916 here. These are out the money quite a bit with these 386. So definitely watch these, because you can see here previously on the day we actually fell down quite a bit. You can see if we go down to the morning of that day, or the after hours the previous day, my bad, 825 after hours, 411 and 406, we saw some major prints, 7.1 million in premium, 1.0 million in premium right here. And look what happened the next day. This is the day we had a 3.37% drop. These puts are up a lot just from these two ones we saw here after hours. And actually looks like we had multiple other ones after hours. I didn't see that, 4:05 p.m. and also 4:06. So all four of these right here all came in after hours. It's a lot of puts, very rare to see something like this. And the following day, you can see just up here, we fell down a ton on here. So these are up a lot. Continue to watch these. I know in July it seemed like they were getting it wrong, and they most likely were, because they were getting squeezed out. But you have to remember, most of the months out of the year, they've been getting them right. So I would encourage you to at least just watch the whales right now, because if they are getting back to their winning ways, this data can be very, very useful for downside potential, or at least knowing when there could be a potential move to the downside. Now, another thing I want to talk about, dark pools. We did get some decent dark pool premium this week. Now, is it anything super insane? No, but 3 billion is something that I was watching for. And if you've been subscribed to the channel here, which is completely free, do so if you have not yet. If you are subscribed, you've seen me talk about me wanting to see over 3 billion worth of premium at least, to kind of get a sense on some heavier selling pressure on SPY. We did get 3 billion at 419.34. So I'll actually go over to SPY's chart right here really quick to give you a better sense on where that is. But this comes in, and it's actually pretty funny here where it came in. Remember, signature prints come in the day before they actually are released. So we saw it on Friday, but they did come in on Thursday. And you can see here, if I draw my line around that 419 range, look at where this happened. This was around the high of day and kind of where we closed for after hours of the previous day. And then we fell straight off a cliff after this. So very likely it was a sell off of these levels up here, 419. And that's 3 billion. So it is a very decent amount being sold there. And if we go previously into the week, you can also see 3.2 billion on Monday at that 422 level. So even higher on SPY. And you can see where that was printed up here. I have it already, 3.2 billion up here. So that's two large prints, the 319 right here, and the 419, and then the 422 up here. And now we're all the way down to 405 very quickly off of these two prints. That's why I've been watching for these 3 billion plus prints, and I've been telling you guys for a very long time, even during the rally, to watch for these types of prints. Now, would I like to see a 5 billion plus one? Yes, that'd be great to see. That'd be a lot of confirmation, especially if it was near highs before falling off. But this is 6 billion plus that we've already seen between these 2 days alone. So that's definitely very, very useful data so far, because these are going to have to be very key levels in terms of where the bulls want to get back above in the future, because as of now, we are quite a ways below. So this is showing us a very strong sell catalyst in terms of institutions at the moment. I have been mentioning VIX and the 22 level for literally months now on this chart that I have here for VIX. Look at where we bounced right off the retest, right at 22, this level right here. I think I've been talking about this 22 level since all the way back, I think it was like November of 2021. Yeah, November of 2021 is where this level started as a demand zone. Also this demand zone down here. This chart that I have right here has not changed since I was making videos earlier in the year. It has stayed the same, and now we bounced off of this part of the wedge right here, the bottom, and this is a perfect convergence. I love to see bounces off this convergence, and there's no doubt in my mind that this is a very bullish setup for the VIX. And as of now, the target in terms of a technical standpoint would be all the way up around 30 to 31 at the very least. Could go all the way up to 35 again, because you know that is a very key resistance level. So I encourage you guys to be very, very careful while the VIX is above 22, as I've said in the past. You can see here that because we're above this 22 level, there is a lot more room to the upside on the VIX, which means heightened volatility, and it can be a lot harder to trade. Now, you can get some very good ranges for day trades, but you're going to see a lot of back and forth chop. You may see a super green day followed by a big gap down in futures and etc. So you have to be careful with swinging stuff, especially once we get closer to that 30 range. So do watch the 22 level. Now, is it impossible for us to fall back below here? No, but as of now, this is a very bullish outlook for the VIX, which would be bearish on the SPX. But other than that, do watch these charts that I shared with you guys today. I will be giving you guys updates throughout the week, and appreciate you guys watching my video again. And do subscribe if you have not. I'm giving you guys this info for free, so appreciate you watching. I'll see you guys next time.